Monday's market closes higher in the grains, mixed in cattle, a lower day in the hogs. Joining us to visit about that, Brian Grady with Pro Farmer. And Brian, the grains trying to recover here after a really ugly week last week. It looked like we were trying to put some weather and some war premium back into these markets. How much do you think we need to put in?
Well, I think from a weather perspective, the concern isn't this week, obviously, with it's going to be milder temperatures and some waves of rain moving across the central United States. So that's going to be pretty favorable weather. It's looking out to next week and beyond and what we'll face there. It sounds like the ridging is going to set up either over the western corn belt, maybe over even the plains, and we'll have to see the positioning on that, and that'll dictate who gets hot or really hot and how dry it is in some of these areas. So that's the key there. On the war side of things, Ukraine, it sounds like they'll start shipping grain. On Wednesday's the target date for the first shipment, with a couple more shipments to come in the coming days after that. But really, we have to keep an eye on what happens with Russia and the bombing at those port locations and that type of thing.
So do soybeans need to put in a little more premium just because those weather forecasts look like August and that pivotal time period for reproductive stages when we're going to maybe see most of that really hot, dry weather?
Yeah, so I think we will see the soybean market now take on a leadership role from a weather perspective, just because once the calendar starts to flip to August, and we're not there yet, but the forecast models are starting to project out into early August, and that's the key. So that is the critical time frame, obviously, for soybeans, and so the market will be more sensitive. Corn will still react to the weather forecast, but I think that we're probably going to see, like I said, the soybean market take on more of a leadership role on that front.
So we did technical damage in both corn and wheat, taking out the July lows last week. How much recovery can we expect? Because we really didn't even take out the 50% retracement levels the last time around.
Yeah, I think the downside breakouts last Friday were a big deal technically, and the mere fact that we bounced back on Monday and got back into those short-term consolidation ranges is kind of a big deal for bulls too. But we need to see follow through. So if we see active follow through to the upside, now you're looking at situations where there's potentially short-term lows on the charts, and you may see some bargain buying and some chart-based buying come into the market and give us additional near-term support. If we don't see that and we take out last week's lows, then it's going to be bears have the decided upper hand and probably see the next leg down in both of those markets.
Although the funds have really decreased their long position in both corn and soybeans, and they're, I think, even short Chicago wheat. So does that take some of that pressure off?
Yeah, I think it does, because, we aren't in a situation where it's strongly bearish. I think that the bears have the upper hand, obviously, as we've seen the funds liquidate here. But I don't think it's a situation where the funds want to be short any or all three of those markets decidedly. So they're probably going to defend some long positions in some of those markets, and they may even be buyers depending on what happens in the weather situation, especially in the corn market there.
And also what happens with the Fed rate increase on Wednesday. So what do you think is already baked in? What is the market anticipating?
Well, they anticipate 75 basis points. It could be 100 basis points. I think if the Fed gets more aggressive, then maybe we dial back some of the expectations for the rest of the year. If they go with another 75 basis points as expected, then the expectation is that we'll continue to see more rate hikes as we move forward through the end of the year. Personally, I think we have to look out into 2023 and start to look at when the Fed may say, we've gone too far, too aggressively, pump the brakes, or even start to lower rates. And so that's well off on the horizon, but it's probably something that the economists are watching more closely.
Gotcha. Let me go back to weather and crop size. How big of a crop do you think that we're trading here in corn and beans? Is it above this 177 and 51 and a half?
I don't think it's above that. Keep in mind that 177 would be a record for corn,
right?
But the trend line number is 181, so we're down from trend line. So I suppose if we get really favorable weather through the end of the growing season, we might see the market start to trade that. Personally, I believe we're trading like a 175 number on corn, and 51 or so, 50 and a half, 51, somewhere in that range on soybean yield.
Gotcha. Cotton market had an up week last week, a little bit of follow through today in December. Are we trying to bottom that market?
Possibly. The concern there is China and the increase in COVID cases. What that will do, they're starting to put some more restrictions in place in some of the key areas, and so demand longer term from China, I think, is the critical issue there. On the bullish side of things, West Texas weather is just extremely negative or unfavorable at the moment, and so you've kind of got two factors coming into play: the supply side with the crop issues, and then the demand side with China uncertainty in terms of the COVID impacts will be.
Yeah, definitely a tug of war. So cattle market kind of able to shrug off initial pressure from maybe a little bit bigger placements number in the cattle on feed report, but the trend is still looking like lower placements overall versus last year. This herd size is shrinking. So do you continue to see this market being able to advance?
Yeah, I think the cattle inventory numbers mean more than the cattle on feed numbers, to be honest with you. And they showed us the herd was down 2%. The number of beef cows out there down 2.4%. The calf crop down 1.4%. And then the heifers held back, significant reduction there at 3.5%. So nothing in the data tells us that the herd is going to get bigger anytime soon. And so as a result, we should have a higher price structure as we look out across the live cattle complex.
So when does the marketing hole come in? Is this similar to the setup we had in 2014?
It could be very similar. I think that we have pulled the marketings forward, and that's a critical thing. When we were going into spring timeframe, late winter, early spring timeframe, we were concerned about the currentness of the feedlot marketings, and that was corrected pretty quickly, actually. And so now we're sitting there where the feedlots have gotten current. That's not an issue moving forward. We do know that we'll have reduced numbers year over year moving forward. And so I do think that at some point in time we will come across a hole in there, or so-called hole, where the marketings are lighter than what everybody anticipates they'll be.
Cash cattle call this week after a couple of weaker weeks?
I think it's still steady down just because that's the trend now for the past 3 weeks. I don't think we're going to see heavy pressure. Last week's price was $1 lower than what it was the previous week. And so probably somewhere in that $1 to 50 cents lower would be my initial call. But if we do get a surprise on it, it would be that maybe feedlots hold out and they do get some firmer money this week.
Down day in the hogs, just some profit taking overdue maybe for that?
Yeah, the cash index is still rising, so it's well supported from a fundamental standpoint. We know that this increase in the cash index was delayed to start with, and now is extended deeper than what it typically would. So I think there's some concerns there about, hey, is this thing ending? Is it getting close to an end? And that's why we saw the profit taking on Monday and the market pulled back. But as long as the cash index continues to climb, we should see limited selling pressure, especially in the front end of the market.
All right, thanks for joining us, Brian Grady with Pro Farmer.